السلام عليكم ورحمة الله.
May the peace of God be upon you.
حدثكم الدكتور سيف صالح السياري.
So this is Dr. Saif Saleh Al-Sari, Executive Officer, Dhaka, United Arab Emirates. Allow me now to switch to English.
So good morning, ladies and gentlemen. This is Dr. Saif Al-Siyari. I'm Executive Officer at the Dhaka Abu Dhabi National Energy Company. I spent most of my career in the energy sector, starting with ADNOC, more than 12, 13 years in the oil and gas sector. After I did my studies in US, France, and UK, all in petroleum engineering, I then moved to Dhaka, which is Abu Dhabi National Energy Company, which has a very, very diversified portfolio internationally. We own and operate 12 different assets in different countries, all the way from India to Canada. And we are the either major shareholders or the 100% owner of all these fields in the oil and gas business, power, water, gas storage, renewables, and so on. The main challenges of this discussions today are not very necessarily subsurface. We are going to have a very interesting discussion today with the great panelists around many other challenges that faces the energy sector. So I would want to give a very, very brief description and introduction of the very long biology of my colleagues here today, who has been in this sector for a long time. And I would want to, unfortunately, we could not host Dr. Elspeth Thompson, who hasn't been able to travel from Canada. So I'll start briefly with Dr. Sara Vakhshouri, an internationally recognized expert on energy markets and security. She has more than a decade of experience in global energy market studies, energy security, and geopolitical risk. She has been a visiting fellow at the Oxford Institute for Energy Studies, and Dr. Vakhshouri has experience of working in both the public and private sectors of the Iranian energy industry and has traveled and worked extensively in the Middle East region, India, and North America. She has published articles in The Economist, Middle East Economic Survey, and oil and gas journals, and in many others, very reputed journals and papers. And she is going to talk to us about the Iran potentialities and implications of a full return to the energy market. I then would want to welcome Dr. Jack Sharpless, who is a lecturer in energy politics at the European University of St. Petersburg in the Russian Federation, where he also teaches European Union politics in the Department of Political Science and Sociology. And he administers the International MA in Russian and Eurasian Studies. He has been the author of Monthly Gazprom Monitor since May 2012. Dr. Sharpless has published articles on the Russian approaches to energy security and climate change and the role of Russia in European energy security, and is the author of regular shorter publications and comments to the media. His current research interests include European Union, Russian energy relations, Russian foreign and domestic energy policy, energy security, energy geopolitics, sustainable energy strategies, and EU policies. It's a very difficult to shorten the CVs, the bios of all the great work that has been done by my colleagues here do their career and how remarkable outcomes that they've seen and came to. But I'll let them speak for themselves today, starting with Dr. Sara. If you please. Thank you.
Assalamu alaikum. Excellencies, ladies and gentlemen, or I would like to say sisters and brothers, it's a pleasure to be here today, and I would like to thank the conference organizers and the center to invite me here and to give me the opportunity to speak here at this prestigious conference. Also, I would like to thank for their hospitality that makes us feel welcome and so warm in the beautiful state of Abu Dhabi, and they really welcome us like their sisters and brothers. As Dr. Saif also, I would like to thank him for a kind introduction. He mentioned that the topic of my talk is potentials and implications of full return of Iran to the energy market. It's a very timely topic, of course. We are sitting now here. There is an ongoing talk between Iran and P5+1. The last talk before the deadline of the negotiations currently is ongoing in Vienna. Combined with this, we have a 30% of oil price plunge in the market because of mainly the oversupply. The oversupply in the market that caused by the lower consumption growth, mainly because of the economic crisis in many countries and lower economic growth, and also the higher efficiency. So the lower demand and higher production from particularly North America caused the oversupply in the market. And now we are going to talk about the full return of Iran, one of the biggest OPEC producers at some point, with huge reserves, and how this is going to affect the market. I would like to start with Iran's 5-year investment plan and its upstream energy. So Iran defines every 5-year plan, every 5-year plan. This is the latest one from 2011 to 2015. Iran was planning to have $255 billion of investment in its upstream to reach to the goals that it has for its production capacity, both in natural gas and crude oil, in upstream, midstream, and petrochemical industries. Well, there is not an exact number, but of course Iran could not reach to the target investment plan, mainly because of the sanctions that they have been accelerated and expanded because of Iran's nuclear conflict. So just to start with here, saying that Iran did not really reach its investment plan. We all know that Iran has a new president, and since last year, Iran's petroleum ministry changed. But this change has a significant effect on Iran's energy industry. Mr. Zangina, the new oil minister, who was the minister before in a previous term too, he's a very well-educated, knowledgeable person. He has a great team in his staff that they have worked during the war, during the sanctions. So psychologically, they're prepared to work under the tough pressure and hard times. Plus, he is a person who is called Sheikh of Ministers in Iran. So we have a Sheikh of Ministers. He was minister for 20 years, and he has this reputation wherever he went, he built that place. So for crude oil, his target for this round of minister, his first 4 years, was to increase Iran's production capacity, crude oil production capacity, to its pre-sanction level of 4 million barrels per day. Again, here I would like to mention production capacity, because increasing the production capacity doesn't mean that Iran necessarily is going to produce 4 million barrels. How much is Iran's current production capacity? Iranian officials didn't say it. They don't know it because Iran cannot already produce at this maximum level. There are different numbers. So our anticipation is that Iran's current production capacity is between 3.5 to 3.7 million barrels a day. And his target is to reach this to 4 million barrels a day. Export, of course, Zangineh's target is to increase Iran's export to the pre-sanction level, which was its official OPEC quota of 2.5 million barrels a day. On natural gas, Iran has huge resources of natural gas, second after Russia. However, Iran's share in the global gas market is less than 1%. So Iran really doesn't have a significant export of natural gas, just have a little bit to its neighboring country, to Turkey, importing the same amount that is exporting. Main reason for that, high domestic consumption, also could not expand its production capacity above that level. To export, Iran has lost the opportunity to gain any share in the LNG market at the current time. It's going to take at least 8 years for Iran to send its first LNG cargo. And by that time, Iran has lost the LNG market. So we think that Iran's main focus will be on exporting its natural gas through pipeline and to its neighboring countries. So UAE, Bahrain, Iraq, Kuwait, these are the countries that Iran could target to gain market share and sell its natural gas to these countries. On the petrochemical side, the day that in 1997, the first time that Zangineh took office, Iran's worth of petrochemical production, the value of it was $1 billion, I'm sorry. And the day that he left after 8 years, Iran's value of petrochemical production was, which is still is $18 billion. So that's what a raise we see. That's what happened. He is focusing a lot on petrochemical industry, and he's going to focus more because he believes that petrochemical industry is going to add value to Iran's natural gas and oil, of course. And especially at the time that there is an oversupply of crude oil and Iran cannot get easily a share in the gas market. On the petroleum products, particularly the sanctions on Iran's gasoline, which was a bottleneck for Iran, Iran imports a huge amount of gasoline. It's interesting that how I always remember Iran's gasoline consumption per day. Iran's population is 70 million people. And gasoline consumption is around 70 million liters a day. So it's like, imagine each Iranian is per average a day, they're using 1 liter of gasoline. It goes up and down. Iran was successful to a certain degree to reduce the subsidies on its gasoline fuel, not to reduce its consumption, but to prevent further growth. And by the new refineries, particularly the project that they have, they call it Persian Gulf Star. If the Persian Gulf Star comes to the full production, by 2017, Iran is going to export gasoline. And this is something that Iran can do it under the sanctions because they already spent the money, they invested the money, and it doesn't require a complicated technology. But Iran has, of course, challenges. In my talk before the price oil drop in October, there were only two challenges, sanctions and upstream investment regulations. But the low oil prices added another major challenge for Iranian oil industry. So we all know that sanctions prevents any capital or technology to enter to Iranian oil industry. The sanction extensively on Iranian oil industry increased since 2012. And since 2012, really no investment or technology entered to Iran, and many companies had to leave Iranian oil industry. The other issue for Iran was on upstream investment regulations. Many of you that you are working in upstream, you know that production sharing contracts or close to this type of contracts is what IOCs and international oil companies are interested in. However, because in Iran's constitution, the foreign ownership of assets, including crude oil, is banned, Zangineh had to introduce a new investment regulation, which is buyback. Well, of course, buyback were not new service contracts, but it was very new to using buyback contracts in the upstream regulations. So Iran still, with the buyback and with the ILSA sanction, no longer on Libya, Iran Sanction Act, ISA sanction, Zangineh and his team, they could attract still 15 billion of investment. But this is not enough. So they have announced that they're going to change their investment regulation to Iran Petroleum Contracts, IPC they called it, is not production sharing. So they are hoping that Iran's parliament is not going to protest the new investment regulation, but is very close to the type of contracts that are used in Iraq, even better. So basically, the length of the contracts are longer, the fees and the costs are more flexible. There are more flexibility and more time that the IOC could be involved in Iran's energy industry. You could, the center has the slides. I'm not going through the details unless any of the audience has question later, but there is a comparison between how the buyback, the previous system, is going to be different from the new system. Something that is really significant in the new type of contracts is to involving the IOC in the production process. Iran jealously was protecting its production process since the revolution, that only an IOC was involving in the production process. But now the foreign companies can also help Iran marketing, selling the production of the fields. I would like to talk about sanctions. So if we hear in the news at the end of this week that Iran has reached an agreement with P5+1, what this means for Iran's energy industry. We know that Iran's energy industry are targeted by different types of sanctions. Sanctions from EU and United Nations, sanctions that are set by US. So what we think, after debating so much, going to Congress, running from Congress to State Department, talking to European Union and people at UN, what we anticipate is that under the scenario that Iran reaches to a full agreement with P5+1, the UN sanctions and the EU sanctions are the first one to ease on Iran. And those are the sanctions that are mainly targeting Iran's export, oil export. So if UN and EU sanctions on Iran's insurance, shipping, and transaction for its crude oil sale ease, Iran is going to increase its production around 500 to 600 barrels, 1,000 barrels per day within 3 to 6 months. So that's their capability. So the market is going to have 500 to 600,000 barrels of oil extra within 3 to 6 months of an agreement and sanction lift. But what about the US sanctions? US has set different types of sanctions since 1996 on Iran's oil industry. The first one that you see a big red cross on it, Iran Sanction Act, previously was ILSA, Iran-Libya Sanction Act, that was set on 1996 on Iran's energy industry, is banning any investment more than $20 million in Iran's energy industry. We all know that this sanction broke by Total of France. That was the first company to come to Iran and saying that American rules are American, they're not applied to Europeans. So European companies came to Iran, US companies are still not in Iran, they couldn't go to Iran. So we don't think that Iran Sanction Act is going to be waived at all. The reason for that is that US Congress imposed the Iran Sanction Act on Iran because of supporting terrorists and not nuclear programs. So any sanction on Iran's energy industry or any different sectors, those sanctions are going to reduce only that are set because of Iran's nuclear program and not the Iran Sanctions Act. So we are not expecting American companies nor American persons to enter Iran if Iran reaches to an agreement. There are 3 different sanctions. The first one, by short, we call it CISADA. CISADA sanctions was mainly on exporting gasoline to Iran. This is something that could be easily removed. Iran threat action of 2012 that is expanding the ISA sanctions and more involvement of foreign companies and investment into Iranian oil industry, which is a more secondary sanctions and more applied on the other non-American companies. This could be relieved. And the last one is National Defense Authorization Act sanction of Iran. That's on Iran's foreign assets that are frozen, financial institution and central bank. This could be also waived. Is the Congress going to waive? Is the president going to veto? What happened? The new Congress of US is has a different leadership, have lots of differences with president. What is going to happen to US if even US do not relieve any of these sanctions on Iran, still European companies can go to Iran, and still Iran can increase its export if it reaches to an agreement with P5+1. So what will happen if Iran returns to the energy market? Of course, its crude oil production and export capacity is going to expand. Iran's natural gas production and capacity going to expand, and refined products, gasoline particularly. Iran is planning to export gasoline by 2017, or at least being self-independent and not importing further gasoline to the country, and also its petrochemical production. And how it's going to affect the market? Of course, on the crude oil side, there's going to be harder price competition in the market. Iran is going to gain share in the market, looking for new shares. Already lost a lot of market share because of the sanctions, and Saudi Arabia is the major substitute for Iranian oil. So most of Iran's market share has gone already for Saudi. We know that Saudi is not going to reduce its production sometime soon, because that's how they are reducing their budgetary gaps, and by producing more, they are filling the gap of the profit loss due to the price plunge. What will happen in OPEC? Can OPEC reach to an agreement to reduce their production? Of course, Iran is not going to agree, saying that I have lost my market share for a decade. It was Iranian ministers some months ago that said Iran is going to increase its production even if the prices of oil drop to $20. So we're expecting that the conflict in the OPEC could increase further. For Iraq, Iranian majority are Shia, so Iranian have a 12th Imam. So they have this famous slang, they say that the hidden hands of the 12th Imam always help us. And here, the presence of ISIS in Iraq is kind of a good help for Iran, because Iraq's market is very unsecure, and there are lots of risks involved in investing in Iraq. So if Iraq is not an attractive market, Iran will hope that at the time that investing in non-conventional oil is not profitable, companies could come once again back to Iran for investing in this country. What will happen for U.S. shale oil production? We had lots of discussion yesterday. The shale oil production, in my view, is going to continue because Americans had invested long time. They're not going to give up working on their technology, working on production of shale oil, but if the prices plunge further, of course, the production of shale oil might reduce to a certain degree. What will happen on the natural gas side? Of course, again, we're going to have price competition. Iran, for gaining back shares in the oil or gas market, is going to offer further discounts. The prices could drop further. Export through pipeline versus LNG is the best option that Iranians are going to follow up very soon. Again, that would be with their neighboring countries that Iran could easily expand in the export market, and this could create new ties, new trade ties. Export of natural gas, unlike crude oil, is a long-term business, whether if it's pipeline or LNG, and that's the best way for Iran to secure its new trade and strategic ties with its customers. So natural gas would be the future of Iran. So how this, in general, going to affect? We think that Iran is not going to expand its crude oil production capacity more than 4 million barrels a day. The reason for that is Iran knows that market doesn't need any more oil. They're seeing themselves more as a gas-producing country. That's something that Iraq doesn't have, Iran has. So they are focusing on natural gas because that will help their petrochemical factories more. They can produce more gasoline, of course, and light distillate refined products from their natural gas. Their condensate will increase by the increase of their production, gasoline production. So for them, we'll have more export values. We think that Iran is going to work with the market. So they're not going to want $20 per barrel of crude oil. So they might not want to increase their production further than what the market wants, and that's 500 more. I'm going to stop here. I know my colleague has interesting topic to discuss after this, and looking forward to the discussion after the panel. Thank you.